You are. Hello and welcome everybody to the Gold and Silver Club at Commodity Markets Outlook for the 19th of May 2016, presented by myself, Phil Carr, at the Gold and Silver Club. So during today's session, we will be analysing the latest developments in the commodity markets. We'll be discussing our outlook for the week ahead. The live session will be covering an overview of the commodity markets. We'll talk about the latest developments, the top trades of the week, live market commentary, and trading ideas for the week ahead. So we'll go over a trading plan for this afternoon. We'll also talk you through a trading plan for the rest of the week and also as we head into next week. And as always, questions are very welcome, and we'll go through those during the course of today's session. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We're regarded as the go-to authority on commodities trading. So as internationally respected experts, our analysis and our opinions on the metals, the energies and the agricultural markets, they're routinely sought by major financial television channels and publications, which includes Bloomberg, Reuters, CNBC, Global Banking and Finance Review, the Wall Street Journal, and of course it's a pleasure to be here presenting on FX Street today as well. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth, generate substantial monthly income through commodities using our signature research-driven trading strategies. So for more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is www.thegoldensilverclub.com. So moving over to some of the latest developments that we've seen over the last week, I definitely want to spend a bit of time here on crude oil, because for me, crude oil is at a critical point in the market at the moment. So earlier in the week, we saw Goldman Sachs essentially come out with their update for a price forecast for US futures will average $50 a barrel in the second half of 2016 and reaching $60 a barrel by the end of 2017. So they've essentially come out with this as we've seen oil breaching 6-month highs over the beginning of this week. We came just shy of $50 per barrel as Goldman Sachs says the market flips into a deficit. And this is very interesting for me as a contrarian. So from a contrarian point of view, I'm very interested to see if $50 per barrel marks the short-term top in the oil market. And there's a few reasons I'm looking at that level. We actually alerted our traders to that potential resistance zone as providing a short-term top earlier on in the week during our live trading rooms. And we're starting to see that follow through. So with that said, I'll move over to our technical analysis, and I'll talk you through that in a little bit more detail. I'll start off with a raw chart. We'll have a look at a raw chart here. We'll take it back to this time last year. And what you'll note is that over the course of January, February, March, April, and May in 2015, the overall price structure was very similar to what we've seen so far in 2016. So we bottomed in oil at the beginning, actually at the end of January, at the beginning of February 2015. And we did exactly the same in 2016 when we broke down to 12-year lows. Towards the end of January, we bottomed at that point near $27 a barrel, and we've since rallied, a move which has seen oil rally back over 80% to the upside since the lows of the year. And now if you go and have a look at the price structure of oil towards the actual it was about mid-May, the mid-May price structure here where we actually put in a short-term top. This is the point that we saw oil start to break down. It started to roll over, and you can see we actually formed a larger bear flag formation. And ultimately, we came back down to the lower end of the trend channel, and we took out that key level of support, and then oil continued to correct, and we had a huge correction, essentially breaking down to 12-year lows. So that is an important point to note at the moment on the chart with respect to where we are right now with oil. So we've come up to major overhead resistance sitting here at $50 per barrel, just shy of that, and we're starting to see a rotation lower. So we've seen a very strong US dollar yesterday on the back of the minutes which came out from the FOMC, which I'll cover with you in more detail very shortly. But essentially, right now, oil is presenting, excuse the background noise. So right now, oil where it's sat at the moment, it's come up to a key psychological area of resistance. We've produced a rejection candle at this zone, and we're starting to see follow through this morning. We've seen that during the US session. We've actually got a position on this at the moment to take advantage of a short-term momentum and a pullback back towards the lower end of the trend channel. So I am expecting in the short term some downside here for oil, and then we'll monitor it very closely to see how oil performs over the course of the US session today, into the close tomorrow, and of course the Baker Hughes report. And we'll be paying a lot of attention to where the COT reports come out on Friday as to whether we're seeing additional outflows in this market. So that's the first market I really want to cover for you on the raw charts there. I'll move over and we'll have a look at that in a little bit more detail. We'll have a look at light sweet crude oil in respect to some of the key moving averages on the chart here and other key levels as well. So what you'll note right now, we'll actually bring it over. We've got both Brent and light sweet crude oil, very similar price structure. So essentially we've come back up towards the upper end of their resistance channel. So you're going to get natural profit taking around this level. We've come just shy of $50 per barrel. And at this point, we are looking to see whether we will see some follow through on both Brent and light sweet crude oil during the course of the US session this afternoon. So I would definitely have that on your radar, especially if we continue to see momentum to the upside on the US dollar index. Okay, that will be very important. So essentially, the minutes of the FOMC yesterday, they surprised the markets, and essentially the FOMC statement, which was delivered 3 weeks ago, it did not give an indication, a very strong indication as to whether the Federal Reserve would go ahead with, or when they would go ahead with their next interest rate hike. However, on yesterday's minutes, which were released, there was a very strong indication that they could go ahead and actually increase interest rates as high as the June FOMC meeting, which is next month. So if you want to put that in your calendar, if you don't have it on already, that is Wednesday, the 15th of June. And that has caused this surge on the US dollar here. So we've seen the US dollar essentially break out to 5-week highs. We've broken back above some key resistance levels, and we're just about attacking at the 95 overhead neckline at the moment. So the US dollar index is poised at this point for a potential breakout again here today during the US session. We're watching this very closely this afternoon. So you might recall at the beginning of the year, the Federal Reserve had stated that there will be up to 4 interest rate hikes during the course of 2016. They then retracted that statement at further FOMC meetings, where they then suggested there would only be 2 interest rate hikes this year, which of course helped the US dollar break down to 2-year lows. It helped to be a catalyst for gold breaking out to the best performance over the first quarter in 30 years, where gold closed the first quarter up 16% on the year. Soybeans, gold, and silver remain the best performing commodities of 2016 so far. And with that, we've seen a very weak US dollar index. So in the short term, off the back of the minutes yesterday, we're seeing a rally back with the US dollar index here. We're watching this very closely. And in the short term, this will represent weakness for the metals. And what I'm very interested in right now is if this is going to be a turning point for a lot of the commodities as we just head towards the end of May and go into June. So I'm sure a lot of you are familiar with the saying sell in May and go away. So this is as to whether we will start to see some weakness here following through to June, get a natural correction which has been overdue. So if we go over to the gold market, gold now, we've been rallying for over 5 months here on gold without any real significant correction in the market. Currently, gold is actually testing its 50-day moving average. It's sitting at $1,250 per ounce. A 50% retracement of the most recent swing low and the most recent swing high would bring gold back to $1,244 per ounce. I'm very interested to see if we will see investor demand around these levels. So if we will see this get bought back into. If you have a look at the overall price structure of gold throughout most of 2016, it's not actually had more than 1 day of closes below the 50-day moving average. And we're coming up for a retest of that point today. So I'm very curious, and we'll be watching this very closely to see, number one, whether gold breaks and closes below the 50 MA, and number two, whether it does that tomorrow as well. Because if it does, this could be the start of an overdue correction on gold, which would essentially provide us with a better entry as we progress this year, because we are looking for more upside in commodities over the course of 2016, but they're definitely overdue a pullback. The move that we've seen so far, gold is still, well, as of actually the close of last Friday, gold was up 19% year to date. So we've seen some incredible moves on gold, on silver. They're overdue a correction and a pullback. So I'm looking to see whether we are going to hold at the moment onto the lower end of these trend channels, and whether we're going to get some buyers come into the market around the 1240 to 1250 level. And if we do, that could also represent a good buying opportunity, because there are a lot of strong hands in this market right now. So gold, I would definitely watch that very closely. US dollar index, the inverse correlation, you can see that playing out perfectly today after the breakout and follow through that we had yesterday. And now we're sitting at quite a key level of overhead resistance here around the 95 level. So if we do get follow through, this is a V-shaped reversal, and it could give rise to a further breakout to the upside, which will also put pressure, as well as gold, also on silver. So silver here, you can see the overall breakdown. We've now broken below actually a Fibonacci level. We're following through today. I see the next major support zone for silver sitting around the 16.30 level, so $16.30 per ounce. And that is the key level, which will be a previous resistance level going back to April that we broke out from. And if we get a retest of that level, which will also correspond with a retest of the 50-day moving average as well, we could see some buying at that level, or certainly we could see some support at that zone. So I think the overall moves that we're getting today are going to be important, particularly as we go into the close today, the close tomorrow, the close of the week, in terms of deciding the direction now between now and the FOMC statement, which is due on the 15th of June here. So paying a lot of attention to what the US dollar index is doing and the pullbacks that we're getting and the metals right now. Again, these markets, they're well overdue a correction. And with this, if we continue to see a strong US dollar, oil is also significantly overbought right now, both in the short term and the longer term. We've come up to key overhead resistance, just around $50 per barrel. So I'm also looking for a short-term pullback on that market too. If you look at the correlations, you'll note platinum has also broken down. We actually had a nice sell short, which we got into platinum earlier on in the week, where we saw a key level of support broken down. We had this nice overhead trend channel here as well, which I'll talk you through on our top trades, where we came up to resistance, we broke through support, and you can see we're following through. Again, I'm looking for a little bit more short-term momentum to the downside, profit taking on this market right now. And very similar situation also with palladium, as we're seeing palladium rotate lower, and also seeing some profits taken on this trade as it continues to break down. Now, another market I also want to just make you aware of at the moment, which I'm sure a lot of you are aware of, is the overall price structure of the S&P 500 right now, which you can see we've got the left shoulder, the head here, and the right shoulder in development right now. What I'm paying a lot of attention to is the VIX, so the volatility index, which essentially that measures fear in the market. If we continue, the VIX at the moment has an inverse relationship to certainly the S&P 500, and it also has a strong correlation with gold. So at the moment, the VIX is starting to rally and rise, which would indicate we're starting to get an increase of fear in the market. So we're starting to move from a risk-on market condition to a risk-off environment. And with that, if we continue to see the VIX rally, this could lend some more weakness on certainly the S&P 500 and the Dow Jones. If we continue to see oil breakdown, if oil was to pull back further and correct at this point, I would also keep a very close eye on equities too, because we could start to see a rolling over, a breakdown in price. We're still holding firm on a very key level of support at the moment with the S&P, which it really needs to break and close below that level and build some closes below that zone in order to really confirm we're going to start heading lower at this point. But I'm watching these markets very closely. So following on from the minutes of the FOMC yesterday, we could start to see a turning point here in the short term between now and the next, well, certainly between now and non-farm payrolls, and then the FOMC statement, which is due during mid-June as well. Now, other markets which have been very lucrative to us over the course of 2016, and certainly over the month of May so far, corn. Now, corn continued to see very strong inflows. We had a lovely breakout trade on corn. We continue to have multiple positions on the grains at the moment. So we've taken advantage of banking one of our positions here on corn as we saw it rally back up to its 2016 highs here. Now, corn I would keep an eye on. We've got the potential for more upside. if it does take out its 2016 highs. You've got key overhead resistance sitting around the 401 zone at the moment. So if we take out the 400 level, we could get quite a lot of clean air above that for some good follow through. I do know at the moment also on soybeans, we continue to see very strong investment demand in soybeans. So we're seeing big inflows continue from hedge funds, money managers, institutions, longer term investors. There's a lot of strong hands in this market. Each pullback has been very shallow. We've continued to see each pullback get bought into. So we're watching soybeans here. We've got a longer term trade on soybeans, but we're also looking to see whether we will have an opportunity to enter back into this market on the next pullback. And I'm very curious to see whether we'll get a break above key resistance, which sits at the 1,090 level at the moment. I would also bring your attention to wheat as well. Wheat has had a lot of good buying opportunities, provided some good buys here. Every time it's come down and retested the 450 to 460 zone, it's currently at the moment, it's had a nice pop to the upside over the course of this week. It's pulling back, really same situation as we've got with corn here. I'm looking for a pop here above major overhead resistance at the 480 to the 485 zone, and looking for good follow through above that level, technically speaking. But we've also got some good support here going back to supply and demand and the USDA reports more recently. Wheat still represents good value, but more so once it comes back down for a retest of the 450 to the 460 zone here as well. These are the key areas that we're looking in order to add any positions at this point in time. So right now, in terms of a trading plan that we're looking at for this afternoon, I am expecting more weakness in oil. So we're watching that to see whether we will start to break down and grind lower. We've already taken out yesterday's lows. So far today, we're moving on track to what we would expect here for a rotation back towards the lower end of the trend channel. Certainly, if I had a long position on at the moment, I would look to start trailing up that stop loss. We've come out of now a much longer term position here on oil, which has been incredibly profitable, where we got in towards the end of January, beginning of February, for over a 2,000 point move to the upside now. But we've essentially hit our longer term profit targets here on oil. And now we're starting to see a bit of a pullback. So I am looking to see whether this will follow through now and get some sort of a black crows formation, which is where you'll see very similar candle by the close of today to what you're seeing at the moment. And then another day of follow through, taking us back down to key support, which is currently sitting around the 46 level on the chart right now. So that's what I'm looking for on oil in the short term. I'm looking for some short term pullbacks. So for those of you who trade commodities, particularly if you trade oil, keep an eye on oil. It still represents an opportunity to get in right now. The risk to reward on this trade is very good, especially because all you need to really do is tuck your stop essentially just above the recent swing high here, and you've got a lot of potential downside, right? You can see 1 to 1, 2 to 1, 3 to 1, 4 to 1, and so forth. You've got the potential for quite a big trade to develop here. So I'm keeping a very close eye on that. If we were to see oil not really break down properly, just get a lot of support, only a very shallow pullback, we can reassess that. But for the time being, with a very strong US dollar, and considering we've already hit a major overhead level of resistance just shy of the $50, we're looking for a short-term pullback. Again, keep an eye, for those of you who trade gold, we're coming back to a major level around the 1250 zone. So this, you've got underlying trend channel. You've also got the 50% Fibonacci level, which sits at 1255, and then the 61.8 retracement at 1244. So this level is important to hold here for gold. So if it was, again, just going back to the chart here, we haven't actually had, over the course of 2016, we haven't had 2 consecutive days of closes below the 50-day moving average. So that would be important in terms of the short-term direction. If we were to see today a close below the 50 MA and then another close tomorrow, and especially if we get a bearish weekly close, yes, I would start to look at a deeper correction here for gold. But if it just gets bought back into towards the US, over the US session this afternoon or into the close tomorrow, if we see more investor demand just buying the pullback, that could represent a good opportunity to also get back in here for a better entry price as well. So definitely be mindful of that. So let me talk you through our top trades of the week using the Gold and Silver Club research-driven trading strategies. So over the course of this week, we've had a great opportunity, actually going from last week. We closed out of this at the beginning of this week when we came just shy of $50 per barrel, for 460 point profit on our oil trade. So we exited that on the 16th of May, and that represented a really nice breakout trade. We had a bull flag formation, which we discussed the previous week. Good breakout, hit our profit target. Platinum, we also took advantage of a short-term sell here when we broke through a pennant formation, broke support, and that's just lended to 340 points profit for us. And we've also taken advantage of corn now, which has had another good breakout. We remain in a longer-term position on corn, but we've taken one of our trades off the table now once we came just shy of the 400 zone. So we've profited from that trade over 260 point profits now, which has been banked on corn. So we've had again some lovely opportunities over the last week. If you would like access to our exclusive live trading ideas ready to implement for instant results, whether you are a new trader and you're just looking to develop a solid understanding of the markets, fast track your results, or even if you're an experienced trader but you're looking to take your trading to the next level, I would definitely suggest the private members live trading room. It is for you. So I'll talk you through exactly what that includes as a member of the private members live trading room. Essentially, you get access to our exclusive weekly live trading room webinars, which are hosted throughout the week. You get live trade setups ready to implement. We provide real-time trade notifications so you don't miss any profitable trades. You get all of our trade recommendations. You get exact levels of where we are entering, exiting, placing our stop losses on every single trade that we take at the Gold and Silver Club. Is very transparent. We provide live trade support, help you successfully through each of the trades that we're taking. You also get customized technical charts and indicators, which are set up for you during your call. So we get that everything set up for you to increase your win rate and make sure you've got exactly the same chart set up, all the indicators that we utilize at the Gold and Silver Club. And you get exclusive access to our proprietary trading research to really give you the ultimate edge when you're trading commodities. So if you would like access to the private members live trading room now, all you need to do is go to www.jointhegoldensilverclub.com. So once you're on that link, you'll find just got a very quick application form to complete. And once that has been completed, a member of our team will get in touch with you ASAP. So I just put that link to make it super straightforward. So once you complete the application form, we'll of course get in touch with you ASAP. And you've also got the opportunity to call us with any questions. You can either call us at our UK office, our US office, our Africa office, or our US or our Asia office. So our UK office number is 0207 193 0403. Our US office is +1 646 808 0403. Our Africa office is +27 11 083 8403, and our Asia office is +852 8191 0403. Okay, perfect. So with that, guys, I wish you all good trading. Have a profitable US session this afternoon. And of course, I will look forward to hear from those of you who will be joining us at the Gold and Silver Club and working with you. And we look forward to speak with you all real soon. Okay, take care, guys. Speak very soon. Thank you. Thanks, Adinda. And thank you, FX Street. Thanks, guys. Bye-bye.